Welcome to the Mortgage Update with Dan Frio. For over 10 years, Dan has been helping AM 1160 listeners. With so many companies to choose from and hundreds of loan options, the mortgage process can be confusing and costly. Be sure to listen each day for Dan and learn the difference between FHA, VA, and conventional loans. You'll also learn how to negotiate lower interest rates and fees, as well as steps to buying your first home and whether refinancing makes sense. Stay tuned to find out why Chicago's top realtors are choosing Dan Frio.
Welcome back to the Mortgage Update with Dan Frio, and I, of course, am Dan Frio. And today, we are dedicating this show to credit. Credit scores, how you get it, how you review it, what it does for you, everything credit. And I would highly suggest that you find me on YouTube. Just go to YouTube and plug in the Mortgage Update with Dan Frio. It's Frio. And you'll find there's probably 220, 230 videos. And I have multiple ones that go over your credit scores, credit score hacks. And I have one that probably has 100,000 views. So I would highly suggest you go there. Just little tips can make a huge difference. So what I'm going to talk about today is we're going to go from the free systems to the real systems, and what I mean, and I'll explain to you what I mean by the real systems. So you're going to say, Dan, the free system isn't real. It is, but it isn't. I'll let you know that in a second. Then how you need to you need to look at your credit. You should do it at least once. I would suggest every 6 months, because if you wait a year, there might be something on there that just popped on there and that's just killing you. So how you review your credit, how you monitor your credit, and what do you do if there's errors on there? So that's what we're going to talk about today. And we're going to go into details on scores and scoring systems and how you do this and that. So I appreciate you tuning in. And if you'd like to talk to me, just give me a call at 630-338-1160, or you can find me on the web at 1160mortgage.com. So there's a website that sponsors the show. It is called creditscoresandmore.com, and that's plural, creditscoresandmore.com. And you should use this system. And if I ask you of one thing, just go to step one. It is a free, there's no obligation, there's nothing there. There's not even a spot to put in a credit card. There's a free credit scoring system. However, the credit score you get is not, and I'll be frank, not the credit score that your lender uses. You might be surprised. The same thing holds true with Credit Karma. The free credit systems normally are what they call a Vantage score. And those were created by TransUnion, and I think it was Experian or Equifax. And they kind of partnered together and put together this. I just reference it. It's a great training tool or great training number. Okay, it kind of blends all things together. If you pulled your Credit Karma score or credit, in the Credit Scores and More website, when you complete step one, it'll give you a score. Believe it or not, that score really doesn't. It probably isn't one of your real credit scores. And I probably have you completely confused, but it'll all, just listen a little bit longer and I'll tie it all together. So you go to these systems and they're free credit systems. They're awesome. I would highly suggest you use it, especially on the creditscoresandmore.com website. The reason being is step one is the free credit scoring system. It is the Vantage score. The benefits of this thing is it's a huge training tool. Plus, you get a lot of extra bells and whistles on this site that a lot of the other systems don't give you. There's monitoring for free. There's credit fraud protection up to $50,000 for free. There's educational tools, and there's even spots in there where you can click and it'll scan your data and it'll give you your best options for, say, credit cards. So let's say you run your free credit system and it says, your utilization rate's too high, and this system will explain to you what that means. And it'll say, okay, you should transfer some of your balance to another credit card. Well, I want to transfer it to a 0% interest card. as long as I can get that 0% interest. So you click in the system, it'll scan your personal information and say, this is your best shot of applying for that credit card. Click it. 2 minutes later, you'll know if you're approved or not. So that's that. The free credit systems are a Vantage score. They're training tools, but they are not your real credit score that lenders use or insurance companies use or your. So, okay, let me move to the next segment. The next segment is your true credit score. Okay. So if you go back to Credit Scores and More and you really want to know what your real scores are, these are the scores that your lenders, insurance companies, credit card companies, auto companies, insurance, everybody's going to use. They'll use that exact score. So if you go to step 2 and you apply, and I think it's $40. And if you go through that website, you get like a 20% discount. You're going to be amazed, completely boggled. And here's what I mean. It's going to show that you have TransUnion. It'll say, here's your TransUnion score. Did you know there's probably 15 different TransUnion credit scores? So when I ask people, what's your credit score? Oh, it's a 681. Which one is that? Your TransUnion car, your TransUnion Model 4 car, your TransUnion Model 8 credit card? They look at me like I'm nuts. If you go to this system, you will find every credit score that's posted on your credit. So it's going to break it down. Here's your TransUnion credit scoring system. So there's 3 credit agencies. There's TransUnion, Equifax, and Experian. Okay. So we'll go through the TransUnion one first. It's going to pull up your TransUnion report. You're going to click it and call me. If you order this, I'd love for you to call me. I'll log into your account with you while you're on the phone, and I'll walk you right through it. And we'll go through detail by detail. I'll show you all the numbers, all the models, all your accounts, what accounts you should focus on, what accounts we're going to review everything to make sure, are these all yours? Is it accurate? 3 out of 5 people have inaccurate information on their credit. So, okay, let's go back to the credit. So we're going to pull in there, you pulled your TransUnion credit score. I'll reference that to TransUnion credit scores. The reason being is there's 3 models. I know there's 3, maybe 4. There's a 4, an 8, and a 9. So under that, there's going to be a TransUnion Series 4 is going to have a car model, a mortgage model, an insurance model, and a credit card model. Series 8 is going to have the same thing. Series 9 is going to have the same thing. There alone, there's 12 different credit scores. Which one's used? Well, are you looking for a mortgage? We're going to focus on the mortgage score. And it could be completely different. I had a client the other day call me. The difference between their credit card TransUnion score and their mortgage TransUnion score was 90 points. Reason being is they pay their credit cards like a shot, and they missed one mortgage payment about 8 months ago. So their mortgage score plummeted because the mortgage score is heavily weighted on your mortgage payments. Okay. So the paid system, your true credit system or credit scoring systems, is step 2 on creditscoresandmore.com. And you can get it there. It's fantastic. And again, this system is a paid. You're paying to get your credit report. And you also can get it. You can pay on a monthly subscription, and you can pull it every month. You can add bells and whistles to this system. I'm not promoting that you upsell or anything, use anything. You can just go in there and pull a one-time thing. Call me. I'll review it with you, and we'll take it from there. So when we come back, what I'm going to do is say, here's what normally happens: is there's a dispute on there. Let's take that back. You're not going to agree with the credit score. You're going to say, well, why is that score this, and why is that, and why is this? And I can go through that with you when you call me and we go through your credit. You don't have to call me. If you can actually go on to that credit scoring, the credit system, creditscoresandmore.com, click number 2, order your credit, and it's probably pretty self-explanatory. You can go through, line by line. I also have a YouTube video that walks you through that system. And it's phenomenal. I can't explain any more how you can't not get this. Sorry about the double negative. That is your true credit scores. You're probably going to find something on there that was inaccurate or old or so old that it should be off of there. A collection account you paid, a judgment that you satisfied, a lien, a mortgage that was, that's paid off, but it's still showing a balance. A collection you paid off, but it's still showing a balance. Those are hugely affecting you, but not always are you wanting to pay off your collection accounts. So when you come back, I'm going to discuss, I have a video out there that probably has about 50,000 views right now, and I put it up about a month or two ago. Don't pay off your collection accounts. And why? Many times you're going to shoot yourself in the foot if you pay off a collection. So we're going to go over that in the next segment. So we're going to go over, how to review your credit, areas on which you want to maybe address some things, some areas where you don't want to address some things. And then if you're really burnt, if your credit report is a mess, I'm going to get you, with companies that are well proven that I've had hundreds of clients use that have been able to clear up their credit, and they're not here to rip you off. So many of these companies, they're going to set you up, and it's going to cost you $200, $300, $400, $500 to get it set up. Then they're going to charge you $100 to $200 a month, and they're going to string out this thing as long as they can, because that is actually paying that's a cash register for them. They're going cha-ching, cha-ching every time you make a payment each month. So what's their motivation to get you done quick if they can just every month go cha-ching, cha-ching, cha-ching and collect payments? So again, I greatly appreciate you listening to the show. It's all about credit. If you have any credit questions, give me a call. It's 630-338-1160. Visit me on YouTube. That site is blowing up my YouTube channel. Just go to YouTube and search The Mortgage Update with Dan Frio. You'll find me. And please subscribe and give me comments there if you like. So please stay tuned. We're going to go over more credit issues and hacks when you come back. Welcome back to The Mortgage Update with Dan Frio. We're going to keep elaborating on credit and credit hacks. So what I want to talk about right now is you pulled your credit, or you see in your credit, and you see a collection on it. And the collection is I'll just say it's a Kohl's account from 4 years ago. It's for $500. What do? You pay it, ignore it, you call the company that might have taken over the collection account. I'll give you the answer on the mortgage side of the business. Don't pay it. Here's why. When you run your credit, and I highly suggest you do, because if you're concerned about your credit and credit scores, then do something about it. Don't put your head in the sand and just wait till the time that you want to buy a house, buy a car, apply for a credit card, find out then, there's issues. And now it's like, oh man, now it's going to take me a month, 2 months, maybe 90 days to get this fixed. Work on it as you progress. It's like if you're going to the beach in June, you want to start working out in January, not May 30th. Okay. So you get your credit report, and now you see there's a collection on there. I want you to focus on one area and one area only. The last active date. That's it. Here's what the model reads. The scoring model reads when it's pulling your credit. Okay, it's going to go through and it's going to say you have a Kohl's account that is in collections, and the last active was 2015. I'll just say, so that's 3-4 years ago. It doesn't care about the dollar amount. It could be $1. It could be $20,000. It's looking at its date of the 3 or 4 years ago. If it's 3 or 4 years ago, ignore it. Don't do anything. The reason being is, as that collection ages, it's not affecting your credit scores as much. Okay? So that's what happens. So the last active date might be the date that it went into collections 3 years ago, 4 years ago. So we'll say 4 years ago, it went into collections. So the last active date is, I'll say 2015. So now, and I get this all the time. Well, I was working with this other place and they told me to pay it. And then my credit scores went down. Well, yeah, here's why. You paid it that last active date. Now it refreshed and says, well, you made a payment. When did you make that payment? 2019. So now the data is reading. There's a collection, even though it's paid. It's saying it's reading the collection, algorithms. Sorry for that word, and it's saying the last active date is now. It doesn't care. It went from a $5,000 balance to a zero. Doesn't matter. It's taking the collection coding in the last active date. So you just shot yourself in the foot because it was 4 years old. Really wasn't affecting your credit at all because it's past due. It's long gone. It's aged. You just refresh that thing to say you have a collection account right now. So you just shot yourself in the foot. However, if the collection account is really new and or you might have to pay it off to qualify for whatever you're trying to qualify for, then you got to do what you got to do. In most cases, what we do is we put that in. If it has to be paid off, we put it in the loan. Even if you're buying a property, we put it that it needs to be paid at closing because we don't want you to pay it prior to, because then if we have to, for some reason, repull your credit scores go down, we might have just shot yourself in the foot, and now you can't buy that home. So that's the part of collections where I really strongly, press that you need to find out this data on your credit reports. So let's see. I'm going through the kind of some coding that I have. Credit show, how you get it, how you review it, how you monitor it. If you need to dispute it, there's ways to dispute, but that's tough. It depends on what it is, how how many there are. I always say, if it's one and it's minor, work on it with the collection company or the company that it's with. If you completely hit a brick wall, this is an area where you get what you pay for. I guess I'll put it that way. You don't know how to negotiate with a company to say, you have a collection company on your credit. How can I get that off of there? One way to do it is you could call that collection agency and negotiate with them saying, how about I pay it in full and you remove it? The first thing they're going to say is, nope. Well, if you hire a professional, they know how to do it. So I don't want you to spend a ton of money on this, but it could be money well spent. So that's how you do disputes and resolutions. So that's that part of it. So now let's go over some, I'll make this last section or segment of the show. We're going to go back to terminologies because this is an area where a lot of people get confused and you can really get hosed. And why I mean hosed is, sometimes people are they're reluctant to ask a question. And I always say, ask me anything. Please don't, when you hang up the phone with me, it might be a 10-minute conversation. It might be an hour conversation. I'm willing and able to help you. I want you to hang up the phone and you get it. I want you to know exactly what we're doing, why we're doing it, and how we're doing it. So I want to go through some terminology with you and just to make sure that you know kind of what's going on if you are in or at some point when you're in the mortgage process. So let's go. One of the words that we use internally, and when you're talking with somebody, they might use this, is the investor, or most of the time it's the investor. You might hear me or somebody say, the investor we're using. Basically, when we reference that is, it's the loan company. Why we reference it as investor versus bank? I usually don't use any banks. The reason being is I use companies, and a lot of these companies you can't get to on your own. All they are mortgage companies, mostly everybody we deal with. And they're wholesalers, meaning you can't go there directly. And all they do are mortgages. You can't go there and get a credit, checking account or a credit card or a car loan. All they do are mortgages, and they do them well. And they do them at costs that beat the banks. They don't have, an office at every corner, the bells and whistles, all this stuff, and they don't have all the things in the background, like, offering car loans. It comes with a cost and people. Credit cards, cost and people. All these extra costs are avoided by doing this. So when we reference investor, it's basically where we're getting the money to fund your loan or for your mortgage or for you to buy a house. Okay? The next thing is, if you're looking to purchase a home soon, cash is, let me reference it back. God bless you if you have the cash to pay for the house in full. But if you don't, cash is no good. A no-no. If you have cash at home, in the mattress, anywhere, mom and dad are giving you cash. You have cash, you have a side business and you just get cash and you throw it in an envelope and throw it in a drawer. Please deposit that money. You cannot use cash. Probably 5 out of 10 loans that I close have an issue with the down payment money needed because the client has cash. And it doesn't matter if you go to me or anywhere you go for a mortgage, cash is a no-no. Because the biggest reason for that is laundering of money. And that's the mortgage or the real estate business is the biggest laundering of money entity in the world. Okay. So the next thing is the terminology of what different types of properties. And this gets confusing when you apply for a loan and you get an FHA approval. Okay. FHA, it's an awesome program, and it's not for somebody who with terrible credit, with no money, things like that. It is a great program that probably half the loans in the country are probably FHA loans. So the terminology behind this, I'm going to get back to it in a second, is there's a difference between a condo and a townhouse. Huge difference. A condo, you own pretty much the interior of your home. A townhouse, you actually own the exterior. So some of the land, the walls, maybe the roof, things like that. The difference between those is huge when it comes to FHA. FHA, if you're getting an FHA loan, the association needs to be and must be FHA approved. That only goes with a condominium association. That's it. Condos only. Condos only are the ones that have to be FHA approved, the association. Townhouses do not have to be. Then you're going to hear single family residency. Single family residency is a single family home. Just a house that one family lives in or one person lives in. It's a one entity. It's zoned as a single family home for one group of people or a person to live in. Then there's multi-units. That could be 2 to 4 units. So when you get downtown Chicago, there's a lot of 2, 3, 4 flats, they call it. 2 or 3, 4 units. So there's condos, there's townhouses, there's single family homes, and there's multi-units. And that's between a 2 and a 4 unit. So that's the terminology that we use. And so hopefully that clarified some things for you. Some people might say that didn't help me at all. Other people say, you know what, that was phenomenal. You helped me out a ton. So I hope I helped you out a ton today. And if I did, please, check me out on the web, especially on YouTube. Go to the website, 1160mortgage.com. And if you have any questions or help or need some assistance or just some guidance, please give me a call. The best way to get me is 630-338-1160. You can find me on the web at 1160mortgage.com. You can even email me if you'd like. It's dan.frio, F-R-I-O, @gmail.com. Thanks for tuning in. God bless. Talk to you tomorrow.
You've been listening to The Mortgage Update with Dan Frio. For over 10 years, Dan has been helping AM 1160 listeners. With so many companies to choose from and hundreds of loan options, the mortgage process can be confusing and costly. Be sure to listen each day for Dan and learn the difference between FHA, VA, and conventional loans. You'll also learn how to negotiate lower interest rates and fees, as well as steps to buying your first home and whether refinancing makes sense.